Okay, so today we are going to dive into something pretty interesting.
Yeah.
We're looking at the SPDR Bridgewater All-Weather ETF,
Okay.
ticker symbol ALLW.
Right.
And trying to answer the question for you, can this thing really work? Can this thing really help investors navigate today's, pretty choppy markets?
Yeah.
And this ETF is built on the all-weather investment strategy developed by Ray Dalio. So.
Yeah. It's based on the strategy, and we're looking at a recent article from the Motley Fool published just yesterday.
Okay.
And for those of you who don't know, the Motley Fool has been around since 1993, providing financial insights.
Yep.
Trying to empower individual investors through their analysis and various services and information.
Absolutely. So what we're really trying to do today is help you understand the kind of the engine behind this all-weather approach. What are the core principles? How has it been implemented in this new ETF? How has it performed historically across different market conditions? And ultimately, does it make sense for you right now? So I think it's going to be a really interesting conversation.
Yeah.
That said, let's jump into it.
Okay.
So who is Ray Dalio and what is Bridgewater Associates?
So Ray Dalio is, I'd say, a huge name in the investment world.
Yeah.
Founded Bridgewater back in 1975.
Okay.
And it's become one of the largest traditional hedge funds in the world.
Right.
They currently manage something like $172 billion in assets.
Wow.
And, he's had quite a bit of success in this industry. His net worth is estimated around $14 billion, according to Forbes.
Yeah, that's pretty good. That's pretty good. So now the all-weather strategy, this isn't something that you just came up with, last week.
Right. No. This has been decades in the making.
Right.
And Dalio, he's very firm believer that an investment portfolio should be able to perform well, regardless of, what the climate is, what the economic climate is. So,
yeah.
His aim was really to create a strategy that would, last the test of time.
Yeah.
And even outlast his own involvement. So it's really interesting to see that he's partnered with State Street to make this strategy something that was, originally designed for institutional investors, accessible to, the rest of us through this new ETF.
So it sounds like there's a lot of history behind this all-weather strategy.
Yeah.
What were some of the kind of key moments or insights that led to its creation?
Well, it's interesting because it evolved over, the article says 25 years of studying financial history and market behavior.
Right.
But two events really seem to play a crucial role in its development.
Okay.
The first being President Nixon's decision to decouple the U.S. dollar from gold under the Bretton Woods system.
Right.
And, that changed global monetary systems.
Yeah.
And really ushered in a new era of, currency volatility.
Well, yeah, I mean, that's a pretty seismic shift, I would say.
Right.
For sure. So what was the second kind of key thing that drove this?
The second was his work with McDonald's. Dalio actually helped the fast food chain manage its exposure to fluctuations in chicken prices.
Interesting.
And this experience likely underscored the importance of identifying and mitigating certain, specific economic risks, which, later became very central to the all-weather strategy.
Yeah.
Yeah.
Hedging chicken prices for McDonald's. I never would have thought of that.
Right.
So this strategy really wasn't originally intended for like individual investors or anything like that?
That's right. The article points out that Dalio actually developed the all-weather strategy for his own family's trust.
Oh, wow.
So the whole purpose was really to create this robust way to, preserve and grow their wealth across any economic climate.
Okay.
It makes sense because, it's a strategy that, ensures long-term financial security for his family.
All right. So we kind of got the background a little bit, I think.
Yeah.
Let's get into the nuts and bolts now. What are the fundamental principles that make the all-weather strategy work? What is the magic sauce?
Well, as the name suggests, it's really about building a portfolio that performs well, whether inflation's rising or falling, whether economic growth is strong or weak.
Okay.
So it does this by blending approaches that tend to thrive in 4 distinct macroeconomic environments.
Gotcha.
You can almost think about it like, building a portfolio to weather different economic seasons.
I like that analogy.
Yeah.
Okay, so how does that translate into actual asset allocation then? What are the typical components of this all-weather recipe?
Sure. So while allocations, can always be adjusted, a typical model might look something like this.
Yeah.
30% allocated to equities.
Okay.
Often represented by the S&P 500. So,
yeah.
Those 500 largest publicly traded companies in the U.S.
Yep.
And then 40% is allocated to long-term U.S. Treasury bonds, specifically those with maturities of 20 years or more. Then another 15% in intermediate-term U.S. Treasury bonds.
Yeah.
So maturities between 7 and 10 years.
Gotcha.
And then finally, you've got 7.5% allocated to gold and another 7.5% in a broad basket of commodities.
Okay, so heavy on the bonds,
Right.
decent chunk in equities, and then some gold and commodities just to,
Diversify.
diversify, exactly. Now, how is this actually implemented in the SPDR Bridgewater All-Weather ETF, ticker ALLW? Are there any notable differences from that, kind of classic allocation that you just described?
Yeah, there are some key differences that that we should make sure that everyone understands.
Okay.
The first is that ALLW is actively managed,
Okay.
which is different from your typical passive ETF that just tracks a certain index. Active management allows the fund managers to really make adjustments based on Bridgewater's outlook at the time and market analysis.
Gotcha.
However, this active management does come at a cost. Literally,
Okay.
it comes with higher fees compared to a passive ETF.
All right, so what does the ETF actually hold right now? Like, what was the allocation as of early April?
So as of April 3rd, the fund's holdings were actually a bit different than that long-term allocation.
Okay.
They had allocated 37% to a U.S. government money market fund,
Okay.
which is essentially very short-term, low-risk debt.
Gotcha.
Then 13% was in an S&P 500 ETF,
Okay.
so those large U.S. companies.
Right.
Another 5% was in Treasury bills, which are also short-term government debt. And then 4% was allocated to an emerging markets ETF. And then finally, there's also exposure to various currencies and gold futures in there as well.
Okay, so that's a pretty significant allocation to money market funds and short-term treasury bills.
Right.
What might that signal about Bridgewater's current, perspective on the market?
Well, the article suggests that this current allocation
Yeah.
with heavier weightings towards more liquid
Right.
and less risky assets like money markets and short-term treasuries
Yeah.
could indicate that they're getting ready for what they see as kind of a risk-off environment,
Okay.
especially considering all the recent volatility we've been seeing and declines in the stock market.
Yeah, no, that makes sense. So it seems like they're playing it a little bit safe right now. Yeah. Okay, so active management, that's a key point. It allows them to shift and change,
Right.
Where they're putting their money. All right, so let's talk about performance now.
Okay.
How has the all-weather strategy actually performed historically?
So that's actually where things get a bit, the assessments can kind of vary
Okay.
depending on the time periods you're looking at. The article refers to data from Nick Magizio's blog called Of Dollars and Data.
Okay.
And he says that the strategy has done particularly well during the 1970s,
Okay.
which was that decade of stagflation,
Yeah.
with high inflation and slow growth.
Right.
And then also in the 2000s,
Okay.
which included, the dot-com bubble burst and the Great Recession.
So times of,
Turmoil.
turmoil, economic
Yeah.
uncertainty. Yeah. Okay, what about more recently?
So interestingly, Fortune magazine had reported that some investors were actually kind of disappointed
Okay.
with the strategy's performance over the past 5 years.
Mm.
But the Motley Fool kind of points out that this is likely because, we had such a strong bull market for stocks over that time.
Yeah.
And, in that kind of environment, a more diversified
Right.
and conservative strategy like all weather might not keep pace with the, really high returns
Yeah.
that you might see from just, a pure stock portfolio.
Yeah. So the strategy, it's not necessarily about maximizing gains in every single market.
Right.
It's more about, creating that smoother ride.
Exactly.
Yeah. Okay. So considering all that, how relevant is the SPDR Bridgewater All-Weather ETF for investors today?
Well, the article mentions the current uncertainty that we're seeing, around things like tariffs and broader geopolitical risks. So, with all these unknowns
Yeah.
and potential economic headwinds, a strategy like this that's, really designed to perform across different scenarios could actually be very well positioned to outperform more, growth-dependent approaches.
So for you listening, what are some of the key considerations if you're thinking about, adding this ETF to your portfolio?
So one of the biggest things to think about is your investment time horizon.
Okay.
If you're nearing retirement and your focus is on preserving your capital,
Right.
then the all-weather strategy might be a good option for you to consider.
Okay.
Especially because of the emphasis on diversification and, its history of downside protection.
No, what if you're younger?
Yeah.
You're, further away from retirement.
Well, then, you have more time to recover from any potential downturns.
Right.
So you might be comfortable with a bit more volatility
Right.
in exchange for higher potential growth.
Yeah.
And in that case, the all-weather approach, might not deliver the kind of returns you're looking for over the long run, even if it offers, more stability along the way.
So it really comes down to, your own personal financial objectives.
Absolutely.
What you're trying to achieve.
Yeah. And your comfort level with, risk and volatility.
Yeah, absolutely. So to wrap up, what are the key takeaways from our deep dive into the SPDR Bridgewater All-Weather ETF?
So the main thing is Ray Dalio's all-weather strategy aims for consistent returns across different economic conditions.
Okay.
And it does this by diversifying investments into asset classes that have historically performed well in those environments.
Yep.
So think, rising inflation, falling inflation,
Right.
strong growth, weak growth.
Gotcha.
And the new ETF, ALLW, provides a way to access this strategy in that structure.
Okay.
But it's important to remember that it is actively managed,
Right.
which allows for adjustments, but also means higher fees.
Right.
And looking back, it seems like it does best during times of, market stress
Yeah.
and economic uncertainty.
So not necessarily those, huge bull runs.
Exactly.
Okay. So how does understanding this kind of strategy, help someone who's trying to stay informed about what's happening in the markets?
Well, learning about different strategies like this provides context on how sophisticated investors and institutions approach these challenges.
Okay.
Navigating markets, managing risk.
Right.
It also shows, how important it is to really match your investments with your goals,
For sure.
your time horizon,
Yep.
your risk tolerance.
Makes sense.
And, it highlights the fact that different market environments can really favor different approaches.
Yeah.
So, understanding that dynamic can make you a more informed investor.
Absolutely. So here's a thought-provoking question to leave you with.
Okay.
Given that this strategy, the whole point of it is to perform across different conditions, what does the ETF's current allocation towards, money market funds and short-term treasury bills,
Right.
Which are generally seen as more defensive, what does that tell us about Bridgewater's current outlook?
Right.
What do they think is coming down the pipeline?
Yeah.
And beyond the specific periods we talked about, are there other past economic environments that might give us clues about how this strategy could play out in today's climate?
That's a good question.
Yeah, it's definitely worth thinking about how these shifts reflect their interpretation
Yeah.
of, what might be coming.
Of the future.
Yeah, exactly.